what are exchange traded funds and dollar cost averaging? Hey friends, what's up? My name is Preston and I'm excited to be your new guide to the world of investing. I'll be sharing simple tips and tricks that anyone can follow easily. So now, if you're ready to learn how to grow your money, make sure to hit the like and subscribe button below and join me on this investing journey. So let's get right down to today's topic, exchange traded funds and dollar cost averaging. Now, what are exchange traded funds or ETFs? To put it simply, an ETF is a basket of stocks that can be traded on a stock exchange, which means an individual can buy and sell an ETF on a stock exchange just like any regular stock. Now, ETFs usually track a certain index, such as the S&P 500 index, or it can be sectoral as well, which can track different market sectors such as the IT, finance, and consumer discretionary sectors. Now, there are some well-known ETFs which track the S&P 500, such as the Vanguard 500 Index Fund, or VOO, and SDPR S&P 500 ETF Trust, or SPY. These ETFs invest in stocks in the S&P 500 index, representing the 500 largest companies in the US. Now, just to give an illustration, as of today, Apple is now $174, Microsoft $316, and Amazon $133, which in total will cost $623 for these three stocks alone. However, if you buy just one VOO share, which is about $400, you are investing in these three top companies plus 497 other large companies in the US. Now, why should you consider investing in ETFs? Now, ETFs that track the S&P 500 index, such as VOO or SPY, only hit one direction in the long term, up. If you look at VOO, since its inception in 2010, VOO has rewarded investors a whopping 301.7%, which means 23% return per annum. For simple, average, or perhaps passive investors who may lack the time to analyze individual stocks, ETFs is perhaps the most sensible investment method to grow wealth. Also, ETFs allow you to diversify your portfolio without having to individually pick stocks, thus providing portfolio allocation automatically and proven capital appreciation in the long run. Now, how do we invest in ETFs? So now that we know what an ETF is and why investing in ETF is worth considering, but now the question is, how do we invest in ETFs? There are primarily two ways we can invest in ETFs, either by manually or by dollar cost averaging. Now, investing manually in ETFs. The most simple and straightforward way to invest in ETFs is to just buy them on the stock market manually. Once you have an investment brokerage account opened up and funded, simply key in the ticker symbol of the ETF and then you can start buying. Now, I've previously done a video on how to choose a right investment brokerage account, so if you need some guidance on that, click on the link in the description below. Now, investing in ETFs manually sounds simple enough, but the drawback is that it could be capital intensive. To illustrate, let's look at VOO. The price is currently $400 for one share, or SPY, which is $436 per share. Now, this means around $550 to 600 Singapore dollars. Now, for those that belong in the category of well-to-do investors with a lot of capital,
good for you.
You can purchase many shares of an S&P 500 ETF or even multiple sectorial ETFs at once and enjoy the returns. However, for those that are new to investing and might not have that much capital when starting out, buying even a few shares could cost thousands of dollars. But don't worry, you guys aren't left behind. You can still invest in ETFs even with limited funds. Now, this other way to invest in ETFs is called dollar cost averaging, or DCA. Now, dollar cost averaging means investing a fixed amount of money into an asset class at a fixed time interval. To illustrate, I want to invest $1,000, the fixed amount of money, into VOO, the asset class, every year, which is the fixed time interval. Now, this is done regardless of the price of VOO. For example, year 1, I invest $1,000 into VOO, year 2, another $1,000, year 3, another $1,000, and so on and so forth. So essentially, this method is on an autopilot. Dollar cost averaging is a simple strategy that actually helps in reducing the risk of price volatility as well as lowering the average cost per share. Now, this is because by investing constantly, whether the market is up and down, means you buy more shares at a lower price if the market is down, and fewer shares at a higher price if the market is up. So how do we implement dollar cost averaging? Now we know what DCA is, but how do we actually start doing DCA? Now to start with DCA, the first thing is to find an investment brokerage that provide DCA plans. Now DCA can also be called regular savings plan by the different investment brokerages. Several investment brokerages such as DollarDex, Saxo Markets and Endowers do provide such regular savings plan, and it may cost as little as $100 per month to get started with DCA. Now you may be asking, how is it possible that I'm only spending 100 Sing dollars to buy a VO share which is 400 USD every month? The answer is yes, it is possible. Investment brokerages that offer DCA products practice this strategy called fractional share investing, which actually allows investors to purchase a portion of a share. So, when choosing an investment brokerage for DCA, do consider 1. If there are any transaction fees when the broker purchases the ETF. 2. Minimum fixed amount of money required per month or per year. Now this is based on your own financial situation as long as you're comfortable with. Once you have picked the right broker for DCA and funded your account, the platforms usually would have a function to allow for RSP, prompting you to key in the amount of money required for the regular savings plan, the frequency of the purchase, it can be monthly or yearly, and to do it for how long, it can be 12 months, 24 months, up to you. So do check in with your investment brokerages on the exact guides or instructions to execute the regular savings plans for their respective platforms. Now just to share personally for myself, what do I do? Due to my capital size, I invest in ETF using the two methods at the same time, manually and using dollar cost averaging as well. Now for investing in ETFs manually, I use Think or Swim by TD Ameritrade. This is due to a user-friendly platform and no commission fees when purchasing the ETFs. And for investing in ETFs through dollar cost averaging, I use iFast Global Markets, which generally is also quite simple and user-friendly, as well as low transaction fees of about $1 plus when purchasing the ETFs. So, for the new starters to investing, DCA might be a feasible method to try at first. And once your capital starts to grow and you become more experienced in investing, then investing in ETFs manually can be considered bringing higher returns to you. So, in summary, we have discussed what are ETFs, why ETFs should be considered, and how to invest in ETFs through dollar cost averaging. Now remember, before you start investing in ETFs or stocks, always remember to invest in knowledge first. Learn and research more about S&P 500 ETFs, look at the returns over the long term, and how does dollar cost averaging work. And that's it folks, now go forth and invest my friends. Until next time.